let's talk a little bit about the TMT sectors. We've obviously had a huge amount of consolidation, a huge amount of strategizing over the last couple of years, and companies have more or less placed their bets. The top 10 have basically placed their bets. Verizon's gone one way, Comcast went another, lost out, and Disney went its way, buying BAMTech. What's the next theme we should be watching?
Well, you characterized it well. The last year, and certainly the last decade, has been really characterized by the fragmented media industry coming back together to achieve some elements of scale, because the technology companies have such massive reach on a global basis. And we've started to see more of that equilibrium achieved. So a lot of the scale transactions has happened already this last year, and now we're seeing these scale players set, but now they still have to be in motion, because there's a lot more to do for the consumer across many different areas, not just video, but gaming, audio, et cetera.
Right, but these bigger players, they have to make these acquisitions pay off, right? Because in many cases, these were massive acquisitions, $52 billion in the case of Disney. So direct-to-consumer was a big success. We had sort of, in your letter, end-of-year letter, you point out 130 down to 108, but we continue to get new ones all the time. Companies are still betting on streaming. Does it work out for everybody?
It won't work out for everybody, but it's a necessary trial, because a lot of the hallmark of the media business has been to operate the business on a B2B basis. So effectively, the companies, the content companies, go to a gatekeeper in order to reach the consumer. That has now shifted to direct-to-consumer models, but everyone has to do it. Everyone has to try to get the consumer's attention. Not everyone will win. You mentioned 130 video streaming services down to 108. That'll continue to contract, but you see the winners: Disney Plus, HBO Max, Netflix, Amazon, Apple, et cetera. But also the media companies will have their own direct-to-consumer services, like Discovery, like Viacom CBS will have Pluto. So they're all going to try it, but not all of them will win.
So how does it end up shaking out? Do they all consolidate these streaming services? Does a Roku type or somebody else decide that it's going to be the be-all, end-all curator? Does it become sort of another bundle type scenario?
Well, it will become a bundle scenario or a curation model. You're going to go to the programmers and the programming guides that make it the easiest to use, but not just on video. I think the ones that will win will have a diversity of offerings, not just the video services, but can you do gaming, video gaming? Can you do audio, podcasting, other things besides just too much of the video system? Also, they're going to have to all invest in content production along the way, because you're going to favor the platforms where you like what you're seeing. And if you go to a platform and you don't like what you're seeing within 90 seconds in the case of Netflix, you're going to disconnect. So there's a lot more of a quickness to the choices that they're going to have to make, and they're going to have to invest a lot in those offerings right now.
So on that point, where does the dollar spend go over the next while? I mean, we've got a huge amount of capital. We've got interest rates at practically zero. We have all these SoftBank Vision funds and Apollo and everything. Does the dollar funding go to content from now on, or at some point does that also become a ridiculous bubble? Yeah,
the content production I think is still a very key area. The underlying content companies, the scarce assets of the world, the MGMs of the world, who has a James Bond franchise, for example. But also the local markets. You're going to see local markets around the world with programming in their own languages. That'll be very interesting and very scarce. Sports rights, also still differentiated content. But the average US adult spends 11 hours per day on media consumption. Yeah. 11 hours. That's not growing that much. That 11 hours is pretty static.
It's only 24 hours in a day.
Correct. So too much of a good thing. I always say, if I took you out to dinner and we had an amazing meal, and the next day I said, that was great, but would you like to do that 11 times tomorrow? You'll say, that was a great meal, but too much of a good thing. I'd like to do some other things, please. I have a job to do. So I think you have to be very attuned to the fact that the consumer would like a lot more than just the video offerings. And I think the companies that invest in these other areas that are underpenetrated and that are local and differentiated content will ultimately be the winner.
A couple of individual stories I want to ask you about. Viacom CBS, you must have been very excited to get that done. You're
relieved.
Involved, yeah, exactly. Does it go the Discovery route? Does Facebook buy Viacom CBS? What ends up happening there?
Well, the deal just finished almost 2 weeks ago. So
yeah, but it's been in the works for so long, there must be a secondary strategy.
Well, I think now they really have to become the content company of choice. That's the strategy for Shari Redstone and Bob Bakish and the management team, to be supplying content across all the platforms. So I think the Viacom-CBS differentiated strategy, as they have articulated it, is to be the content production studio, like the old days of Warner Brothers, to many of the platforms out there and to sell to everybody. Disney Plus is a great service, but only has Disney programming and all the Disney affiliate programming.
So would the idea be that it would stand on its own and that it would survive like that by producing more, better, faster content and having more partners then?
Yeah, I think the strategy is to be somewhat of an arms dealer, saying we are going to supply to anyone that wants to buy from us and have the best-in-class programming. They'll also have their own direct-to-consumer offerings, like the Pluto service, but I think their hallmark will be supplying content to the best buyer and the best platforms out there. And for that, they're going to need more and more content. So you probably do see more consolidation over time, but it will slow from the platform that's been created.
Speaking of dynasties and arms dealership, succession, you say that's going to be what determines the success and failure of these major companies in years to come, because many of the dynasties are about to turn over.
Yes, we've been living in an age where we've been looking at the same media moguls for the last few decades. And they've all been creating huge amounts of value and a lot of, obviously, sized companies. But that's now turning over. You've seen Rupert Murdoch sell the business. Now Lachlan Murdoch runs New Fox. You've seen Sumner Redstone, now Shari Redstone running the company, and the new CEO, Bob Bakish. So I think there's a new, younger generation of leadership that will have to make new, bolder bets for the foreseeable future, and it'll be a much different road because there'll be a scaled environment against the technology companies and not as easy to just build assets for assets' sake. It has to be focused on execution and value creation.
Sprint and T-Mobile, does it get done? Colorado and Mississippi are happy. Can the other states get appeased? Will Dish up, do the job?
It's unclear whether it will get done or not. Probably does at the end of the day, but may have to get reworked somewhat because I think both companies need each other and there are very few other options, but I think the environment will need to consolidate there.
Is there going to be a big broadband 5G face-off, or are we many years away from that, Aryeh, and who benefits?
Well, connectivity overall, I think, is very important to keep in mind. It's much more interesting to talk about the new show and content and streaming platforms, but it all requires the connectivity and the broadband offerings getting more and more pronounced for the consumer. So I like the broadband connective companies, whether it's the cable companies, which people think of as video, but really think of it as a broadband connected pipe into the home. 5G will be there for a long time, but I think it will take a little bit longer to actually get into the marketplace in mass. You'll start seeing it in 2020, but really the cable companies will have the advantage for a while.
What's the deal that you would like to pitch as a dream deal, or are already pitching?
Well, that's probably not something I would talk about today, but we're working on it for 2020. But again, I think a lot of the big deals have been done. The deals that you're going to see from here are going to be much more adjacent than the big, bold transaction. But video games is an area we think is still ripe for consolidation. The consumer internet companies overall have $4.3 trillion of market value. The video game and audio companies, only about $200 billion. That area is ripe for consolidation.
True, and we saw that big deal for Gimlet with Spotify, $237 million, which surprised a lot of people with the amount that it was bought for. Europe still hasn't really been conquered by one major player. I see you smiling. Who's it going to be? Is it going to be 2020?
In Europe, I think you have a lot of sort of weakness and fragmentation among countries, sort of different from the US, where there's a lot more built-in economic strength right now. So I think Europe will have more consolidation across the footprint. We like the digital outdoor space a lot with a company called Ocean Outdoor that we actually, for full disclosure, own a piece of. But I think the digital outdoor space is actually one of these areas where you can take share back from Google and Facebook on the marketing and advertising side. So we like outdoor advertising as a pan-European consolidation play. But there are others in telecoms and data centers and other forms of communications that I think Europe's weakness will play into a little bit.
Just out of all the deals that have gotten done over the last couple of years, in your opinion, were they all correct with their strategies? Did you feel like the horizontal strategies were the right ones for the companies that did that, the verticals were the right ones that did that? A
horizontal M&A can be very successful financially without having to take a lot of risk strategically, meaning because you're buying like-for-like assets in a horizontal merger, there's a lot of cost savings that will cushion the time frame of having to execute beyond the current strategy. So like a Disney Fox, for example, is a horizontal strategy on cable channels and content and studios. But at the end of the day, they're really pivoting that content in a direct-to-consumer environment. So it's really what you do with the assets post-synergies has not yet been determined whether these deals will be successful or not. That's going to be the key thing, is you have to go all the way to the consumer. You can't end with just the horizontal merits of the deal.